Right, good afternoon, YouTube. Thank you for joining us. You will probably hear the press conference in the background. I'm going to try and control the volume a little bit for you so you can make sure that you're not only hearing that. So let me try and get that down a little bit, but I want to keep my ears on it because the chairwoman of the European Central Bank, Christine Lagarde, is currently holding her first of many press conferences today, or audio clips that we're going to get out from her. She's on again with a podcast apparently at where are we? She's on currently at the 1:45 press conference. She speaks again at 3:15. I think this is about the TPIs. And then, yeah, this has been moved, which was originally at 6:30. So that was when it was originally scheduled. Obviously, that's been pulled forward a little bit now. But yeah, she was rumored to be out at 6:30 as well today. So let's have a look at what she said and what's been done today. So let's start in chronological order. Well, let's quickly reflect on the moves last night from the Fed. Obviously, a dovish hike, wasn't 50 basis points, just the 25 the market had priced in. And we saw aggressive moves yesterday on the Nasdaq from that when Powell started speaking. Aggressive move to the upside, really big day, and we pushed on again this morning. Interesting to talk about the gilts and what happened with the UK market on the Bank of England. So this was their rate hike, 50 basis points, but the gilts have rallied on this. So the yields are down in the UK, so they feel like they might be getting towards their terminal rate as we go forward. So yeah, that's why we're seeing this rally taking out new highs in the bond markets. This is something that's echoed on the German Bund. We had, well, that first of all moved on the 12 o'clock time print with the gilts, but then went really aggressively at 1:15 on the European rate decision. Really aggressive moves on the bond market, and this has been echoed in the indices. So yeah, nice moves from 1:15 on the DAX to the upside. That hasn't really stopped yet. We had a little wobble as she started trying to hammer home how strong they are at holding back their rates. So that's something that we will need to listen out further for. I'll try and listen while I'm talking, but it is tricky. But yes, she did try and reiterate that, yes, they're saying they've raised 50 basis points this time. They're going to raise 50 basis points again in March, as we knew. But in December, she said they were going to raise 3 more. That's only 2. And now they're saying it's going to be data dependent. So it is very much a softening of stance. And that's why we're seeing this more aggressive move to the upside. If we have a look at the currency, see the euro selling off a little bit against the dollar, albeit nowhere near the same volatility that we're getting out of the bond markets or the stock markets at the moment. So yeah, this is quite an interesting day. We are seeing some kind of correlations play out nicely here. I've just been chatting about the VIX on our live Zoom that we were doing through the start of the ECB press conference. And that we're now seeing the VIX down towards these lows from 2022. So really low volatility compression on this. And this is what sends stocks higher. Generally speaking, when VIX goes up, stocks go down, as we'll know from what happened on this huge VIX spike with COVID. And as soon as that started drifting back lower, this was the low in the stock market, and obviously they're still higher than those, quite significantly higher than those lows today. But every time we get these spikes, these correlate to sell-offs in the indices, and whenever it kind of gives it back, that's the rallies in the indices. And my God, we've been giving it back, and some really since October. That low that we had around the CPI number, we had that big snap down and ended up closing about 300 ticks on the Dow when we were 500 down at one stage. It was the biggest reversal though we've seen for some time. And ever since then, it's been drifting lower. And especially since the start of January is when we've had these big rallies in the stock market. So if we take a look, I know Jerry was talking about this on the live Zoom, but if you have a look at the DAX on the daily chart and take a look at what happened since the start of the year. So this is the 3rd of Jan, and then we had this big spike up here on Friday the 6th on the non-farm payrolls. Well, it was really the average hourly earnings coming in softer. And since then, we've not really looked back. It's been pretty green across the board, a bit of consolidation. And now we're starting to really motor on. This is one of the biggest days of the year so far in terms of DAX upside. So very aggressive buying in stocks. Let's put this in perspective. Where are we? So if you think back to if you look at the Nasdaq by comparison, from where we were back in the kind of January of this year, we are still a long way back. We haven't even taken out those highs from August. The S&P slightly better. Those highs in August haven't been taken, but we're starting to kind of run these CPI day highs that we had on the 13th of September and the 13th of December. They've now been taken out. But if you look at the DAX, the European indices have done incredibly well since those lows. around October. And yeah, we're now back into kind of the chop that we were in really for the second half of 2021. Similarly, the FTSE as well. This is another market that's obviously done incredibly well this year, nicely above those 2022 highs. And yeah, roll back, we're really kind of got these longer term highs in our sights, which we got very close to from 2018. Yeah, it wouldn't be a surprise to see those taken out if this gluttony for risk continues. So yeah, very volatile, very interesting market, very much a news-driven market at the moment. Yeah, technicals work on momentum, but if you don't already understand how to trade the news, then get in touch with us via the YouTube or through our Instagram channels. And yeah, please reach out, because this is going to be a market, I think, for some time that is incredibly news-driven. And the fact that Lagarde herself has said today that they're going to be data dependent going forward after March suggests that the European data will really start to have a big influence on markets. The bond markets, the currency pairs, the indices will all be affected to a large degree by data releases from Europe. So this is something we had a lot from the US data last year, but we think we're getting close to their terminal rates. I don't think Lagarde knows herself where these terminal rates are yet. She has been trying to hammer home higher, significantly stronger for longer, but that's really not what the market is believing. Similarly, really with Powell yesterday, there was a lot of hawkish stuff initially before we started talking about disinflation, but the markets just wanted to go up, and we saw that with the Nasdaq, as we were talking about on the Zoom last night. That kind of similar patterns to we've seen time and time again. You kind of short the figure, then you get out of that short at around the time the speech starts, at around 7:35 to 7:40, and lo and behold, we were already by 7:45 or 7:40, should I say, on the march higher, and yeah, still grinding higher from there. So yeah, really interesting start to this year in terms of rate decisions, and I think there's going to be plenty more interest out there as we go forward. I'm not able to listen to Lagarde, so I'm going to pop that off so you can hear me a little bit clearer. And let's take a look at what's ahead of us for the rest of the day. So yeah, not a huge amount in terms of data. We do have Jordan out from the Swiss National Bank at 5:30, and then all eyes tomorrow for those of you trading. I'm not here, but the non-farm payrolls at 1:30 and the ISM services at 3 o'clock. It was the ISM that really moved the markets last time. We were expecting a 55 print back in January, and we got a 49.6. So they've obviously lowered their forecasts for this one quite significantly. But yeah, this was a really clean move, especially in the currency market. The dollar yen did about 2 big figures that day in a pretty straight line. There was no short that wouldn't have made money, really. It gave very little back throughout the day. So that's a very interesting number to listen to. I think the third most important number historically, the ISM numbers. And obviously the most important historically for the indices has been the non-farm payrolls or the full employment report. And people think that, well, I've been trading a while, the non-farm payrolls is the big one, right? But the average hourly earnings has been the main one to be looking at over the last 6 months or so. And last month, in fact, we had what should have been quite bullish dollar news for the non-farm payrolls. They were better than forecast. If you have a look in here, you won't see it better by much, but let me zoom in and you hopefully can see this. We had, as we've been seeing, a lot of beating. The gold is the expectation, the blue is the actual, and each time, going way back, we've had consistent beats on this number. Looking down here, you can see how consistent these beats have been since, well, April last year was the last time we had a miss on the NFP. So yeah, anyway, this was bullish data for the dollar, but it was the average hourly earnings that was softer than expected last time that really moved the market. So just be aware, average hourly earnings should be a significant mover as we go through tomorrow afternoon. So let's have a look at what's happening ahead of this US Open. We're getting close, you've got 20 seconds from the Open here. And let's see where we're at. As I say, we've been taking out this long-term volume area on the S&P 500, and yeah, consistent kind of grinding higher on the Nasdaq has been really, really pretty. I mean, if you look at the Dow by comparison, this is very much the laggard here. So if we zoom back and see the highs from last night on the the 825 highs on the Nasdaq, we are miles above there, whereas we've not even conquered that yet on the Dow. So you are seeing that disparity between the indices. So just don't think that necessarily you want to be just long one and it's going to long any of them. You probably want to be, if you want to be long one, maybe the Nasdaq's the one to be long. If you're looking to be short, the Dow is probably going to give you that little bit more downside. It certainly has in recent days anyway. So yeah, do bear that in mind with your correlations as we go through. As we start the session, S&P is just having a little look higher. NAS is the one leading the way, and the Dow, we've seen so many times in the laggards, nice spread trades we've had this year on being long the NASDAQ and short the Dow. That will be paying off pretty attractively already. These spread trades work quite well, especially around the earnings season, and we are there at the moment, so that could be one of the reasons why we're seeing this. We did have Honeywell data out earlier from the Dow Jones. They are quite a big chunk of that index. They were kind of mixed data, though. They're the 10th biggest component, coming in at around 4% of the whole Dow. So yeah, the fact they were mixed probably shows what, that kind of there's kind of a contradiction really compared to the data we had out at 9 o'clock last night, or just after 9 from Meta, which was up over 20% up on the open, if you can hear that on the squawk. So yeah, that's certainly a bit of disparity between these two markets that we're seeing once again. But yeah, I'm going to try and tune into the end of the speech from Lagarde. I encourage you to do so. It's all on YouTube or on the ECB website. So yeah, do tune in, see the takeaway from this, because I think this could be quite a dominant theme for the next couple of weeks. And yeah, good luck with your trading today, and we'll be back with you at 7:50 in the morning. And trade safe.